Hello, folks, and welcome back to another edition of Money in Motion. Good morning. It is a nice Monday to start the week, so a lot of interesting price action. Sold off a little bit on Thursday and Friday in terms of equities. The dollar has been going up quite a bit, still is green today, along with the NASDAQ and some other risk assets. So I'm excited to break down all that stuff and more. We do have some interesting crowded trades that are starting to break out and break down. So I'm excited to look at those charts, and I think we got a lot to cover today because we usually do each Monday with a bunch new data and a bunch new stuff to look forward to. We have FOMC this week as well on Wednesday, so perhaps we get some interesting intraday volatility. But aside from that, Monte, anything? I mean, how you doing first and foremost? But anything you looking forward to this week, or got your eye on specifically?
Oh yeah, this is a big week. This is a big week, my friend. You hit most of the major catalysts there, but also we got earnings and a lot of the big tech names as well. For instance, Google has earnings tomorrow, and that's resulting in some major volatility today. At one point today, it was up, I think, about 2.5%. It opened up, and now it's back right on the day. Still positive, but the candle is red nonetheless. And it's not just Google, many other names, Microsoft, Apple has earnings next week, Amazon as well next week. Meta has earnings tomorrow. So lots of these big tech names in the queues, the Magnificent Seven that we've dubbed them, have earnings coming up and are seeing some pretty big volatility leading into these earnings reports. So let's take a look at what could plausibly happen following, these earnings reports for Microsoft, Meta, and Google, because those are all tomorrow, the 25th. So Google, I'm actually in a position. I'm in the 125 calls that expire this, or 123 calls that expire this Friday. So they're underwater right now, and not just because of the current price, but also because of time decay. So I've lost a decent amount on that trade, but I'm hoping that, I was hoping that we'd see a run up into earnings. But what really kind of threw a monkey wrench into that, I think, was Tesla and its reaction to earnings. That really shook the conviction of traders in this market and their willingness to run up something into earnings. We're seeing a lot less of that now because, we could plausibly see this same sort of reaction to price following the earnings reports of the other big tech names like Microsoft, like Google, and like Meta. So it'll be interesting to see. That being said, Tesla coming into its earnings was trending very positive, at local highs. Meta, on the other hand, has been in a 3-day slide. Earnings could be a positive catalyst for Meta, especially considering the run up that it's been on all throughout 2023, and the plausible revenue that they've generated via advertising with Instagram and whatnot. And then also you have Microsoft. Their earnings report, I think, will be very interesting as well. Their recent step into AI hasn't really come to fruition just yet, but it could certainly be a catalyst for price. Again, like Meta, kind of pulling back into earnings, which is not what Tesla was doing. So don't expect the same sort of thing. If it beats on the top and bottom line, we very well might see some positive price action. But nonetheless, tomorrow will be the day we find out what exactly the internals of these companies are looking like. It doesn't really matter all that much. More matters how the market responds. That's what we always say. Matters how people are positioned, how the market responds. Right now, I think a lot of people are going to get bearish into earnings because of what they saw Tesla do. And just a moderately positive earnings report could lead to a lot of those puts being forced to cover and price going up. So the fact that we have sort of bearish sentiment coming into earnings, I think is actually almost a good thing for a lot of these stocks and actually makes the likelihood of this earnings report being a positive catalyst more likely, just because of the negative sentiment that we're seeing leaning into it. So those are the three big names to have your eye on today, because tomorrow they will have their earnings. I believe all three are after hours earnings, but nonetheless, keep a close eye on those, because I do think that people are selling pretty hard into earnings, and if people position themselves bearishly, expecting a similar move to what we saw in Tesla post earnings, they may be disappointed, and that could result in a big move to the upside. So we'll, but that's what I'll be watching this week, CJ. But there is plenty more to discuss. Um, I know you've been taking a close look at COT. Sent out your COT report to our members yesterday. A lot of great info in there. Anything in particular that you would like to start off with in terms of what you're seeing on this Monday?
So last week we learned that the stock market does not, in fact, go up every single day. So that's interesting.
Good to know.
Therefore, I mean, it's kind of like the point Horse made. It's like you have a lot of passive flows into equities, whereas you don't in crypto, where, you'll get fear, you'll get panic, you'll sell off 10 points or whatnot. And then, you'll have that absorption come in of funds who still think that they wanted to buy these prices at kind of depressed levels. And the other point that Horse made, I really liked when we had him on last week. Really encourage you guys to check out that video. Still very relevant to a lot of the points that could be made today. But it's like if we make an all-time high and you're a fund manager on Wall Street and you're not long into the all-time high, you don't have a job next year, because your job essentially is to give people exposure to equity markets in bull markets. And we still do have a lot of folks somewhat sidelined. At least that's what futures positioning would suggest. Now, this week in particular, I always talk about not trying to guess direction necessarily. Like that's, sometimes if I have a lot of conviction, on something like Coinbase or like a crypto equity or a secular trend, and you want to make a big bet, that's different. However, in an intra-week basis, or like looking this week or next week, equities could certainly continue to rally, but I don't have a whole lot of conviction. This could be a local top. We could have a 10% sell off in equities before maybe a squeeze to new all-time highs. I'm just speculating here. So instead of kind of picking a risk on, risk off play for this week, kind of how I've seen positions and how I'm approaching this week is putting together kind of like a cocktail of positions that don't really have correlation to one another. And maybe one of them loses, maybe two of them work. Perhaps two of them don't work, but get stopped out early, but then the one winner wins a lot. So it makes up for all of that and a little bit more, or maybe all three of them lose. It's always, there's always that possibility. But I think when you play those positions against one another, it can give you a better, a smoother P&L curve over time and allow you to succeed, not necessarily by predicting direction, but by predicting kind of positioning and how price will move based on that positioning. So without further ado, let's get into the cocktail. So first one I want to talk about here is coffee. We've talked about coffee, I think, going back to last week as well, but I got stopped out of this position once before last week, so lost like 50 basis points on it. But last Friday was its most positive day. And I mean, you can even see just by looking at the chart. So we have some, critical technical strength that we're being shown. You also have a lot of the other softs, things like orange juice, sugar. Orange juice made a new all-time high yesterday or on Friday. So the softs in general are kind of breaking out and continuing this uptrend. The thing that I like about coffee and what we've really highlighted it for is because it's got a lot of crowded shorts. If we look at COT data here, what I looked for to enter a trade is basically two things, or I guess three things. First, we want to have the commercial oscillator, COT oscillator at 100. This shows that commercials have been accumulating and are, maxed in terms of long on a relative basis. They've also been buying a lot, as we can see by the commercial movement index going above, positive 40 in the past few weeks. That's another good sign of accumulation. So, just because they're accumulating doesn't mean price necessarily has to reverse. It shows that it has the potential, though, once there's an actual catalyst. The one shift that we did have that is somewhat unfavorable is that you got speculators, specifically retail, a little bit less short or a little bit more long this week, which is typically not what I want to see, but it's not such a low relative level. Like retail really hasn't been making that much of a difference in the coffee market over the past year. So, I'm willing to kind of throw that one out. But you still have large specs getting very short at the lows, and now they're starting to get squeezed, which I like. So that's potential of a trap in terms of like a short liquidation. And it's very comparable to what we saw. If I were to do like an educational example, I would go back and reference soybean oil. It's magic beans. They're all just beans, okay? It's very simple. But anyways, we had a very similar type of thing here. You had accumulation for a very long period of time in soybean oil. You had commercials getting long, and it took a long time. This is a position I got squeezed out on, or I got stopped out on a couple times as well before, like a month ago, and then it finally ended up working. But once the short squeeze begins, as you can see that inflection point, and these are 3-day candles we're looking at, the up move can be very violent. Just like what we've seen in the dollar last week. And, I'm going on for kind of a long time here. I'll pass it back to you, Monte, in just a minute. But
No, you're good.
I think the importance of what you need to realize is that these short squeezes, not only do they force people out of positions, but they create a correlation breakdown within these assets. The dollar is going up all last week while equities were going up as well during.
Yeah.
You have the same thing today. That's because you're getting a correlation breakdown because, it doesn't matter. You're getting people forced out of positions. And when that occurs, correlations can break down within 24 hours. So that's important to take into account. And, typically another thing that you would usually see is like commodities are kind of, inverse to the dollar. That's another thing I like about coffee today. You actually see it up with the dollar. So maybe a little bit of a correlation failure, but we also do kind of have a dollar short squeeze thing going on. Moving on, silver. So massive move in terms of speculators last week in silver. If I go to the weekly chart, it'll be a little bit more clear. But you can see a ton of people got long in terms of large and retail speculators. They got long silver last week into the dip. If the dollar keeps going up and, we basically have risk assets like gold and silver getting sold off a little bit with a strong dollar, then this is one that could be lining up for an interesting long squeeze or just basically a long liquidation event back to maybe 22 or something. Either way, we have those similar characteristics where you have, COT oscillator reaching zero, a little bit of a selling climax in terms of commercials. And of course, what we had mentioned at the beginning there, a lot of asymmetry between large speculators and commercials in terms of their open positions. So aside from those two positions kind of playing off one another, if I were to look for longs and equities, it would probably be through Russell, same type of thesis as last week. I probably wouldn't buy it. Yeah, I'm not going to buy it today. But, if we had something like this where, we were going to break out to a new high, that might be a breakout that I'd be willing to buy. But as of now, I'm just I don't have a lot of edge anymore in that trade. So just kind of going to leave it be. That was kind of a last week trade. But the dollar here, if we look at dollar positioning, still very strong. So it might surprise some people. We'll see. Either way, a lot of stuff there, but that's kind of the cocktail of 3 trades that I'm looking at this week. Maybe short Russell, but after today's price action, perhaps not. But yeah, shorting silver and then longing coffee. So we'll see how that goes. Maybe they get stopped out. Maybe they work. Either way, it's just one trade. It's not the end of the world, and it shouldn't be either way. So
yes, that's an important thing to remember. It's just one trade, not the end of the world. But I want to take a look at Bitcoin dominance real quick. And segue that into some Bitcoin and general crypto analysis. Bitcoin dominance looking ugly today, which is a bit surprising, right? Because when we think about, typical risk off price action, um, you know, we don't really think about, um, or well, if you look at this chart, right, you'll see a lot of the alts down even more than Bitcoin, but Bitcoin is down significantly more than ETH. ETH is actually holding up relatively okay relative to Bitcoin. So that's an interesting dynamic that is worth noting because typically it's the opposite. Typically, if Bitcoin were down 3.3%, we'd see ETH down about 4%. But I think because of the amount of ETH staked currently, it's kind of acting as a means of preserving current price. That being said, Bitcoin's breakdown level was 30K really. Like once we got below 30K, there wasn't too much hope of it coming back up to this 32K level. For ETH, I think that level is 1800, marked by this white line here, and we haven't hit that level yet. So ETH could plausibly play a game of catch up to Bitcoin in terms of negative price action. It's almost exactly 1% behind in terms of like lagging. But if you look at Bitcoin dominance, I mean, and that in conjunction with CJ's analysis of the dollar, um, I think we could see Bitcoin dominance fall back down towards 48.5%. That would be a technically sound move, come back down, retest former resistance as support and see if then we, go higher. But during that time, what I would expect to see is Bitcoin actually selling off a little bit harder than Ethereum and some of the other alts. And although I don't necessarily ever like to short Bitcoin. I still think that with Bitcoin dominance falling, that doesn't mean that the alts are going to be performing well. It just means that from a capital perspective, there'll be less capital flowing out of them. I still think that you can see alts show higher beta and have Bitcoin dominance falling. Um, and if Bitcoin dominance does retrace this level, I think pretty much anything you look at. I mean, the watch list right now is a sea of red. It's hard to short anything at these levels, right? But looking at Bitcoin dominance and looking at the dollar, it looks like we're very much risk off starting the week. And if that continues, I think looking at assets like BNB, even things like BCH, which have been, massive movers. And I've been reluctant to play this one to the downside because, it was crowded, but funding rates have kind of returned to neutral over the weekend. And I think if, Bitcoin, like I said, continues to slide, if ETH breaks below that critical 1800 level, I think we see a lot of alts give a lot back to the market. So, kind of a bearish outlook this week. And that's just based on what I'm seeing from Bitcoin to start the week, based on what I'm seeing from the dollar. But then again, like I mentioned at the start of the show, we do have earnings as a potential catalyst for a lot of the big names in tech, like Meta, Google, and Microsoft, all have earnings tomorrow. And that could be a big catalyst and bring back on some of that risk on price action. If we see the dollar start to slide, then maybe I'll change my thesis for the week. But right now, based on what I'm seeing, I'm leaning bearish in essentially all of crypto. And I think that shorts are the play this week. Any thoughts on that, CJ?
Yeah, I was just gonna say I have no idea really. Crypto and equities are pretty tough to gauge right now in terms of like their positioning, and I thought I'll go back to the horse interview.
It was a good one.
Straight from. I agree with a lot of the points he made. Very articulate and kind of laying them out as well. But basically, like 95% of the ETF trade is priced in or has been. It's bigger, fundamentally longer term. But, looking at price action and things like Mara, Riot, Coinbase, obviously. Today, you're beginning to see the first 3 days of that mean reversion. So whether or not that continues throughout the rest of the week, probably like 50-50. I mean, we'll see. Definitely looks to be likely, but not enough for me to like make a trade. I'm kind of exhausted in terms of shorting crypto. Like I just want to play it to the upside and just catch the bull market secular trend with a little bit of leverage. That's fine. Otherwise, if I want to play a risk off trade, like I'll probably just short something like silver, have better defined risk, better liquidity, better edge. Just knowing if a liquidation event is going to happen, it's going to be bigger than, however high price would go alternatively. So that's kind of where I get my edge. And I don't really have anything in crypto this week to start other than making fun of WorldCoin. I think we could go on a nice rant with the tokenomics of that.
Yeah. Also, Twitter rebranding to X. What do you think of that?
I don't like it.
Me neither. It's like pretentious and like dystopian almost. Like
it's a horrible brand. X, like,
yeah,
they're almost stooping to the level of Threads.
Yeah.
Like isn't Threads black and white logo? Is X gonna be same type of like black and white logo?
I don't know. I saw it was like a neon, like, I don't know. But anyway, just like the word.
We're not gonna leave the platform regardless. So what the hell are we talking?
Yeah, I know, right? But like, what do you like?
Matter.
I'm still gonna call it Twitter, just like I still call the Sears Tower instead of whatever it's supposed to be called. But
Willis.
Yeah. No, that's not what it's a Sears
You're
Tower.
Still,
and it's Twitter. It's
Brooklyn
Twitter, Elon.
Dodgers. Yeah.
Gotcha. But yeah, I mean, WorldCoin. CJ, you put out a nice thing in our Discord that Jack Dorsey spoke about. Kind of the implications of that sort of business model of WorldCoin and collecting biometric data from users and the implications of that. And I thought he was very articulate. So if you didn't check that, I believe you post that in the crypto section of our Discord. Definitely worth checking out.
Yeah, Vitalik wrote one as well.
Oh yeah,
that was really very, very thoughtful, and I definitely recommend you guys to read Vitalik's thoughts. And he's not even really sure it can be done in a decentralized way. So I think there's a lot of interesting. I mean, you're basically opening up a lot of Pandora's box when you're doing, biometric stuff like that in order to confirm identity. But evidently what they're telling us is that deep fakes are going to be very difficult to prove whether or not, it's the actual person, which is plausible, right? But I don't know if the solution for that is scanning everybody's eyes into an orb in the entire world. And like to make the claim to say, all right, deep fakes are a serious problem, WorldCoin is the perfect solution. That's a pretty big leap.
Yeah, it is.
And it's already worth $25 billion, and VCs have 99% of the allocation. Like this is just, I thought we were past this like FTX era of Silicon Valley scamming retail and just dumping tons of float on them. But I guess we are still copying projects like Maps that went up for like 2 weeks in 2021 and then went straight down for the rest of their eternity. So yeah, WorldCoin makes an SBF project looked quite mild, in fact. So that's hard to do. Very impressed.
Yeah, those tokenomics are legitimately ridiculous. That thing is going to crash very, very hard. It's just a matter of when. But anyways, I think we'll end it on that note. Please don't forget to like and subscribe. It really helps out the channel a lot. And if you haven't yet checked it out, we highly recommend you come over to tradethechain.com. You can try it out for 14 days free. We got a sentiment dashboard that I check first thing every morning. It's led to some great trades. I know Nick has made some really nice trades in the last couple of days based on sentiment. So definitely go over there and check it out. You also get access to our Discord with a community of members from all around the world who share their insights as well. So come be part of the discussion. You can try it for 14 days free at tradethechain.com. But CJ, I'll leave you with the final word today. Go ahead, my friend.
If you don't like us, we'll give you your money back, maybe.
Simple as that.
Yeah, I hope you guys enjoyed. Please like and subscribe. It helps us quite a bit. But thank you for watching. Hope you have a wonderful week. should be interesting here. It's always a good show on Mondays with a ton to go over and to watch. So yeah, should be a good one, and we'll see you guys back here same time